Okay, thanks, Bob. So what was the first thing I do here? All right, great. Yeah, well, thanks very much to ABARES for the invitation to come and speak to you here today. It's been probably a decade since I've been to an Outlook conference, so it's been a great learning opportunity for me to catch up on all the different forms of agricultural and natural resource management issues across the country. What I'll talk about today is, again, on the supply side of forestry, the role of institutional investment, which will be an important future part of the financial support for the plantation forestry industry in Australia. And as part of that, I'll make a few comments about the rationalization of the MIS sector that's going on presently as we speak, really. Just a brief introduction to our company. We're an investment management business. We've been operating for sort of 5.5 years. We focus on the institutional investment, effectively unlisted commingled funds where investors put their money together and it is a pool of capital that then goes out and makes investments. We have a couple of dozen employees. Our head office is in Sydney, actually in Chatswood, and then we have regional offices up in Asia and in San Francisco. We manage now over $1 billion in assets, primarily from super funds, pension funds, reinsurance companies, and endowments. We've recently, last year, closed a $500 million fund for investing in Australia and New Zealand. So that's a significant, very focused investment fund, probably a first time that an institutional fund has just focused solely on our region. With that funding and with co-investment from Alberta Investment Management Company, we've recently been successful in acquiring the land bank of Great Southern Plantations from the receiver. So that's the first sort of major investment of that fund. We're also moving ahead with closing a Southeast Asian forestry fund in mid-2011. And our idea is that this is sort of a whole integrated market that we can offer investment opportunities to our clients. Institutional investment in forestry has become quite significant. There's now, I would say, closer to $50 billion, or even potentially now slightly more than $50 billion invested in forestry, or what's called the timberland asset class worldwide. And that has really grown from nothing in the late 1980s to where it is today. And at the moment, I would say, if anything, the attractiveness of the asset class has actually grown, has become more attractive to investors, and that's for 2 or 3 reasons. Firstly, people went through the global financial crisis. They found there was enormous volatility in their portfolios. They looked for ways to diversify their risk, and the first thing what has been found with forestry is that it has basically capital appreciation as the trees grow, and then when you cut the tree you get income, and you have some option back and forth between capital appreciation and income, and your total returns, however, have quite low volatility from year to year. So that's quite attractive. The second is a positive correlation with inflation. Forestry over decades has been shown to have high correlation with inflation and including unexpected inflationary events. And because of the current high levels of debt of many governments coming out of the global financial crisis, investors have a view that many governments will try to inflate their debts away. And so finding inflation-linked assets is highly attractive at the moment. The other thing with timberland or forestry assets is that they have been shown over periods of many decades to have low correlation with other asset classes. So when people put together a portfolio of a variety of assets, they look at what's called the risk-efficient frontier, the level of risk relative to the returns. And so adding forestry in continuously helps improve the risk-efficient frontier at a portfolio level. And so, at the moment, I would say that there's billions of dollars of institutional capital that's looking for a home in forestry assets around the world. So what is the nature of the investment opportunity in the forestry sector? Well, I usually think of forestry in three broad tranches. There's the reservoir of natural forests, primary forests that have yet to be logged, and that would be northern Canada, Siberia, Indonesia, and so on. And these have always operated globally as a kind of an economic margin that floats in and out depending on the price of timber. The second component of the timber supply is what I call the semi-natural production forests. A lot of the forests of the USA and Europe, for example, have been managed on a kind of a semi-natural timber regime for decades. And the third tranche, which we'll primarily talk about today, is the intensive plantation forestry sector. And that's the sector which is largely developing rapidly in the southern hemisphere and to some degree the tropical regions, Latin America, Australia, New Zealand, Southeast Asia. And the drive now is that we're seeing sort of the end game of the frontier forests. We've seen agreements to reduce logging in the Canadian boreal forest. We've seen an agreement by Norway to effectively pay Indonesia to stop primary forest logging and conversion. Siberia's exports have dramatically fallen, not just because of their export tax, but I think also because of the whole cost of moving further and further from rail sidings and so on. And so what starts to happen is that economic margin phenomenon starts to be replaced by a need for the price of timber to meet the cost of capital to grow trees. And when that happens, then investment will flow into expanding timber plantations. In terms of the markets and how investors think about geographic allocation of their portfolio, timber is, an enormously internationalized commodity. There's a variety of different products that are traded. Softwood timber for housing, for example, softwood and hardwood timber for pulp and paper, feature-grade timbers from high-value species like the teaks and merantes and so on for furniture and flooring. All those markets had quite well-developed linkages, and Canada selling newsprint to the United States and tropical hardwoods from Africa to Europe and so on. All those patterns were well-developed. All of that's getting restructured now, it seems. And the U.S. housing market has collapsed. It peaked at something like 1.6 million units in 2006. It's now down to 600,000. China's imports are skyrocketing, some grades up 50% per annum. We're seeing now a long wave phenomenon seemingly emerge around bioenergy and biomaterials. If you look at some of the statistics on potential biomass demand in Europe and United States, it can become almost a significant whole new grade of timber market development. And what's coming out of this has been a realization by investors to move their investment flow out of the U.S. or away from the U.S. towards the southern hemisphere and tropical regions where people believe that the future of supply and demand will be played out. And today 75% of institutional timberland investment is in the United States. I think we'll see that's just steadily slide now over the next decade, and the growth is really all into Latin America. We're seeing, well, all of New Zealand has largely been rolled over into institutional ownership. The same is now happening to Australia. We're seeing 4 or 5 companies like ours going into Southeast Asia, and that's where the growth is happening in investment. So what is the outlook for Australia? And it's kind of interesting. There's the 2 tranches of asset. There's the pine, which was established, as Bob said at the outset, through the activity of government to provide softwood timber for domestic use, dairy, oilseeds, grains, beef, sheep, softwood timber, hardwood timber. So there's a whole variety of uses. And I think that how the MIS will play out may well be different from how the government forestry assets play out in terms of their future use. The good thing for Australia in terms of attracting institutional investment is that these government privatizations and MIS assets are proving to be entry assets for institutional investors, so they can buy these and then build their asset base over time. Coming in and trying to put large amounts of investment into greenfield forestry is much riskier and requires higher return. And when you look at the price of timber today, it just simply isn't high enough to meet the risk reward profile that people would be looking for in terms of greenfield forestry. So I guess in closing, we've seen about $2 billion of institutional investment come into Australia to date in the timberland sector. We expect to see a continued progress of the rationalization of the managed investment scheme industry and potentially some state-owned forestry assets. I think that at the end there would be a total asset pool of probably $7 to $8 billion here in Australia. And I can say that there is significant international interest in these assets, but more importantly, I think there's also now growing Australian institutional interest in these assets. So, I mean, it's a very well-designed asset, as I said at the outset, for long-term investors. Institutions tend to have a strong requirement for sustainability in terms of investment performance. They are trying to match their investments with their liabilities, which are often 20 to 30 years in length. And so really they're natural owners of these kind of long-dated assets such as timberland. So from there then, you know, where does it lead? And I think it's really comes down to fundamentally whether timber as a land use has better economic characteristics than other forms of agricultural production. In other words, timber will have to compete for land. And secondly, Australia will have to compete with other regions of the world that grow timber, and that will effectively define how large or what the end scale will be of the plantation forestry estate here in Australia. Thanks very much.